What's up, guys? Welcome to the webinar after watching that video. And today we have here the representative from Select Properties. Let him introduce himself a little bit first.
Well, thank you for having me, Sean.
Yeah.
I'm Lucas Chong, Senior Manager from Select Property, a UK developer. And I think just to introduce Select Property, we are a British property developer, so we are more experience-led. And what we do is that essentially we specialize in building different asset classes in their best emerging market. Personally, I've been in the overseas property market scene for close to 10 years now. And I'm currently running the Southeast Asia region.
And he's from Kuching.
Yes.
So cool. So he's now actually based in Kuching. And I think it's even cooler when we have a local person to kind of bring us through foreign property scenes.
Yeah.
We kind of spoke a little bit behind the scenes, right? You were in Singapore, you started the Hong Kong branch as well.
Yeah.
Right.
It's very interesting, I think, looking back as well. We just found out, Sean and I, we were alumni from Tarzan.
Yeah.
Yeah, very
College,
interesting.
yeah.
Yeah, Tar College, yeah. And so my background was sort of in accounting. So I was practicing auditing. And that was back in Singapore. And I was a chartered accountant by profession, ACCA. At some point, I've decided to switch to property because that was very interesting to me. We ventured into the property scene, CA registered. So alongside, I was then acquainted with the UK property market, Select Property. Yeah. And gradually that was back in Singapore. And then we set up the Hong Kong office. That was in 2019. And now I'm very happy to be back in my home, Sarawak.
Okay. Malaysia, welcome.
Yes, yeah.
So I think from a Malaysian perspective, right, then speaking from a person who have knowledge about property in Singapore and Hong Kong and UK, right, what's the main difference like for you?
I think that's a very good question. Yeah, it's also a very wide topic to discuss as well. I think similar to my personal life philosophy, it depends on what you want. You know, as investors ourselves, and to most of my clients working with me, we are both looking for capitalization and investment. So from investment point of view, properties are all the same on the fundamental level. So it's all down to supply and demand, isn't it?
Yep.
But with different countries, if you ask me, we are looking at the macroeconomics of each country. So instead of, why UK, if you look at why investors are investing in the UK, the macroeconomics is a bit different because UK, certain regions, it is still imbalanced in terms of supply and demand. So say, for example, for a established country like Singapore, for example, we do see prices going up, of course, which is good. We do see higher stamp duty now. So I think foreigners have to pay up to 60% at BSD now, which is a bit on the higher side. Yeah.
Gone case for investors.
I know. So all these are cooling measures, right, introduced to control the market. So if you look at different markets, we want to enter at the time of the property cycle where we get to capitalize and maximize on the most optimum potential there. And with UK, it is special because it offers that imbalance of supply and demand where you have a bigger room of growth and in terms of rental sustainability as well. Yeah. So if you ask me the main difference, that would be the edge of it for UK market.
Yep. Especially when you compare to Malaysia.
Yes.
Right.
Yeah.
In 1 month, we have 8 to 10 launches, new ones.
Yeah.
But in UK, it's a new project is something different, right?
Yeah, exactly.
Also, based on my experience, the entire rental market in UK is crazy good for an investor point of view, right?
Yeah, it's true. That's also one of the reasons, why UK is the top choice for foreign investors. I mean, among all options, I think in the current market, when we look at investment per se, obviously we look at, especially for overseas property, what comes to mind? There's a lot of factors that we need to consider. Regulations, for example, isn't it?
Yep.
Tax planning as well. Ownership rights is something that we need to consider. And of course, more importantly, the ultimate goal would be the capital growth as well as the rental yield. Yep. And with UK, it is a big country. So it depends on which region that is the lack of that imbalance. So it's driving up rental very well and also on capital gain. I'll share more with you on the actual cases we've done recently. But also it depends on your personal portfolio arrangement. So it's not for everyone, I would say, right? You may be comfortable to invest in your home country when you've invested at a certain level. If you want to explore outside of Malaysia or even Singapore, we have options: Myanmar, Vietnam, Australia, UK, so many options. But why UK is the top choice in today's market. There's many reasons for it. Yeah.
Then, okay, this is a very selfish question.
Yeah.
Manchester versus London. Like I know Manchester is a lower entry level, but personally, like which one is has a better investment vibe right now?
Yeah. Good question again. But when we speak of UK, what comes to mind is always London. It's a very core market for investment too. A core and stable market, and London will remain so. But if you look at UK as a whole market, so in 2015, a master plan was introduced, which is called the Northern Powerhouse. And the main objective of this master plan is to divert the economy from London to North City. And Manchester is the core city for this whole master plan. So if you look at 2015 to now, what has happened? A lot of funds and measures are taken to boost economy of North City, in particular Manchester as a core city. So for example, Manchester Airport is going through a £1 billion expansion, and they've done so into like an airport city, and last month they just announced a new phase 2, a 1.3 billion expansion for the airport. So property aside, that's bringing in connectivity, bringing in people, boosting the economy of the country as well. So that in terms created growth for your property and sustainable rentability and demand as well. So if you look at Manchester now, the population growth is 3 times higher than the UK national average, which is also why, back to your question, the rental demand is so high now. So we just had a past property that was completed this month, in fact, and we pre-agreed very high rentals. In fact, for a one bedder, we're looking at £1,007 per month, 2009 even. And there was a capital of approximately £300+ per se. So it's very good rental demand there. Yeah, and I think circling back to what we said earlier as well, with UK, it is a good option because it's not regulated in terms of many aspects yet. So you can resell before or after completion.
Really?
Yes, you can resell before completion. Some countries
we cannot.
With cooling measures that you can only sell to certain locals or restrictions, but UK is still free in that sense. Yeah, so it's for wise investors, they take advantage of that. So again, the same development. We have sold some reassignment. So our investors were asking me, Lucas, so how's my property performing now? With the uncertainty in the market, is it making losses? So in fact, it's making gain, and they've sold it for between 8 to 12% capital gain in 1 year's holding. That's through the construction time. Yeah, so that's a very healthy growth. And if you look at the whole market as a whole, with all the master plans going on, there's still a massive room for improvement there, for a supply to catch up with the demand as well.
These are things, right? That's not going to happen in Malaysia. Right, let's face it, right? 10, 12% a year, I made it in like 10 years or so. I laugh already.
Yeah, it's
sure.
On the mass market, I think just to point out, it's between 4 to 5% on the mass market, which is healthy. But on the construction period, we do see a higher growth there. So now we've seen actual cases of 8 to 12%, which is, great for investors. For short and both long-term holding there.
So in that case, like for your, like the handover property, right?
Yeah.
How was the buying appetite like? Like who are buying?
Yeah. For buyers, they are mostly investors across the globe. So Select Property, we're headquartered in Manchester. We're a Manchester-based developer. And we have a great portfolio of properties across the north of UK. We have global offices in Dubai, in Shanghai, in Hong Kong as well. So I do travel around in that manner. So I would say most are investors, a good majority from Asia, I would say 60%, and 40% from Middle East and local UK as well. So it depends on purpose of whether it's for own stay, whether your children are going to the UK, you want to hedge the expenses, or it's for holiday house or investment, then we sort of advise accordingly to that manner.
One thing I really like about properties in UK, right? You guys always present audited data.
Yeah.
Right?
Yeah, we try to give the closest actual data as we can for transparency as well.
Yeah.
And just to see whether this would fit into your appetite in terms of your growth, in terms of your financials as well. So this is what we try to do in terms of comparables, rental market, and also for the growth, which is what most investors are focusing on as well.
Yep. Like for Malaysia, no lah. We just say whatever to make you buy lah.
Yeah. And I think just to point out, I think back to this because the regulations are seen in UK, is very fair. It protects both buyers and sellers, so investors don't worry too much on that as compared to a lot of other countries in that manner. Yeah, and of course, if you look at UK as a whole, right, the political scene is very stable, right? So the past decades, 20 decades, if you look at the growth chart, it has been a steady growth despite Brexit, despite financial crisis. So to me personally, when it comes to property investment, it's always entering low and exiting high. And that is where, you profit from it basically. And UK offers that platform and coming in with a lot of other benefits like stamp duty rates, tax planning, which is quite friendly relatively as compared to many other options.
Yep. That's definitely. Then your experience, right? Do a lot of Malaysians buy UK property?
Yes, we do have good numbers of buyers from Malaysia. And in fact, most of my buyers are from Singapore and Malaysia. Most of my clients, they follow me long term. So since day one until now. So
make money, really, of course, follow you lah.
Yes, I think same for you. Yeah, which is good because we always treasure long-term relationship in that manner. So for us, apart from buying into the property, select property, we pride ourselves in after-sales management. So in terms of, even exchange of contracts, to construction updates, to handover, securing a mortgage, or to even reselling. We have an internal resale team in the UK that can resell for you when you wish to exit. So exiting your investment is always something important in this investment strategy.
Yep.
So yes, a lot of Malaysians are buying there. What I noticed would be they're also capitalizing on the currency gain from UK because British pound is a very strong currency as well. So apart from your property growth, you gain from the currency gains. And a very good option to diversify your funds outside of Malaysia.
Yeah, so I think based on my friends who bought UK properties, I think that's the few main reasons. One is show off lah. Oh, I got UK property, because it seriously mean that you are going beyond your property quotas in Malaysia already. Like you have 4 or 5 in Malaysia already. It's time to diversify. Then by diversification also means currency. And just so happen Malaysia currency not very good lah. That's why from there they gain. And like in Malaysia, we always go for, we can only choose one either, which is like, is it for rental, high rental returns, or is it for capital appreciation? Very seldom we get to buy properties with both. And for UK, it offers that.
It offers that, I think one thing that really attracts is that sustainability as well, because if you look at our property, for select property, our properties are all in Zone 1 Manchester. So depending on the timing, some are relatively more mature market now, but we always build source land that's highly sought after, and which is typically near or is part of a main master plan in Manchester. So it's not, the sort of smaller redevelopments happening there, but it's sort of the priority regeneration happening there. So it's a very sustainable blueprint. Where we see schools coming up nearby, a medical center is moving into one of our developments next year. We've got retail amenities nearby. So existingly, it covers the existing pool of tenants, which is near the CBD. But we consider about the future demand, tenant demand there. So on a long-term basis, it's a very sustainable demand with good growth. And of course, that translates to demand when you want to exit the market, when you want to sell the market as well. So these are two very important things that I think UK offers very well, right, in terms of, because it's emerging. I think going back to the fundamentals of it is emerging. So you do have a good demand for both rental and resale market for the foreseeable years to come.
So convincing, right?
It is the truth, Sean.
I know, that's why I'm killing myself for not getting. So back to your portfolio, right? So which project are you working on right now?
So currently we have launched a very exciting project in central Manchester. So it's called One Port Street. It's located in M1 central Manchester. I think for those who are familiar with Manchester, Zone 1 is not a big area. So to walk from one point to another, I think you were there recently. It takes about 30-40 minutes. So Manchester has grown very well since 2015 as well, when Master Plan was announced. So there's not much land to supply. So these are awarded to larger developers. We secured a plot in M1. So One Port Street is a 32-story buy-to-let residential. In local terms, a condo. And this is under our new Prestige collection. So this is a premium development, and location-wise is about 10 minutes walk by Google Map to the main shopping center, right? So it's a one straight line. 10 minutes, you reach your Harvey Nichols, your Selfridges, and it's about 9 minutes walk to the main train station, which is the Piccadilly train station. To add on as well, with one of the northern powerhouse, apart from the airport expansion, another larger plan is a high-speed 2. I'm not sure if you heard of that.
Yeah, I heard of it.
Yeah, it's a longer-term plan, but it's starting from London, going to North City, so passing by Leeds, Birmingham. The final station is in Manchester, Piccadilly train station. And when that completes over the course of period, of course, we do see new job opportunities, right? We do see a new economy coming in, so that further boosts your future demand as well. So One Port Street is part of the high-speed 2 framework. It's located within it. So it's 9 minutes away from it as well. And also it's next to a very new priority master plan, the Central Retail Park Master Plan. And with Central Retail Park Master Plan, essentially it is a 1 million square feet commercial spaces, mainly catering for larger spaces for commercial players. So we're looking a lot at tech media companies going in that area. And for now, because it's still a new master plan, so by entering into the location, the area now, you get to fully capitalize again on the growth when these master plan actualize in the next few years as well. So that's very attractive. And of course, if you look at One Port Street, it's located in the Northern Quarter. So Northern Quarter is this upcoming area as the creative district of Manchester. So when you were there, you'll see a lot of wall arts, a lot of key restaurants and bars. And that's essentially where new tenants, where they want to live there now. So all these factors benefits you as landlords there.
I've been there. So I feel, I know where is it. Wow. Yeah, so Piccadilly, I think that station, then you add on with the airport, you add on with the Selfridge, right? Selfridge is like a pavilion, like the biggest mall, right? Malls to us, like Malaysia, so many malls, right? But their mall is a big thing. And they measure everything from walking distance. We all car cannot, Puchong to Puchong also 1 hour. Cannot vision. So I think like the northern part, where just how you see, it's true. And this is something that Malaysia may not be very familiar with, is whatever they say master plan, whatever they say developing, right, all will come true.
It all comes true. In UK terms, we've seen it for the past years as well. We've seen the master plan coming into realization, and we've seen the growth actual fact as well. And of course, with One Port Street, it's also one of the very few developments in Manchester to have pool facilities. I think unlike here in Malaysia, I think swimming pool is a very rare thing, especially in Manchester. So not much developments will have it. But we are full facilitated. So it comes to swimming pool. We do have a rooftop terrace on the 7th floor. The Paganini Lounge is actually named after an old bar in that location. We've got co-working space, which is really well demanded in UK. Like
I visited like 6 condos, all their co-working space in the condo is packed one.
I think it really adds value now because more people are working remotely now, or have that flexibility. So it's one of the features for the new generation of tenants as well. And coming to my mind now as well with UK, the culture is a bit different from Malaysia too, because I think the average of buying the first property in UK is higher, so it's above 40. Unlike here in Malaysia, we try to buy as young as we can. Like you, maybe 17, right?
No lah. 17 cannot sign papers.
But yes, so majority they do like to rent. They like the flexibility of being able to move as well. So that contributes to a big pool of rental. So it benefits you as a landlord definitely for Manchester.
So what's the entry price like?
Entry price for One Port Street is around about £325,000 for a 1-bedroom, and a 2-bedroom we round about £430,000, depending on the floors and views as well.
And the best thing, right, always we think about like what they say, right? If you anything just convert back to ringgit, right, and you look back into the rental, right, it's damn good, right? But just that, okay, so what are the setbacks then? Like, what are the things that investors, if they were to buy, they should know about?
I think when it comes to not just UK, but any overseas investment, right, you need to be familiar with certain things. One thing is management, right? You're in Malaysia, your property is in UK, it's not a near flight away. So you need to know your property is well managed. But on the bigger level, I would say, understand the regulations. UK offers flexible regulations, full ownership as well. which certain countries doesn't offer for foreign buyers. And of course, in terms of securing a mortgage as well, that's something to look at. With management, look for a reliable developer or even agency that has a very good track record. I think me being a auditor in nature, I'm a very analytical person. And with Select Property, what I've seen is that we've really helped clients in these matters from end to end, which is why it really helps our clients long term. So a lot of buyers are repeat buyers in that manner. So do look for companies like that can assist you on long-term basis, not just investing, but also managing and exiting your property.
Yeah, so I think that's something where, like you said, if it's the first foreign property, right?
Yeah.
The distance actually scares people.
Yeah, correct. I think you first have to be familiar with the market first, right? Right. Even if you invest somewhere nearby, you want to be familiar with the market. Have a peace of mind when you invest, right? Because it's hard-earned money, and you want to make sure the money works for you and the way you want it to work as well, and see which platform can help you to achieve that. And UK fits in that criteria to a lot of people, especially Manchester, because if you look at the quantum, London is a core market, but prices has gone up so much now, and rental can only go out to a certain ceiling. So if it's zone 1 to 3, you will be capped at a certain point. So depending on when you enter the market, I would say if you enter now, your rental might not be as good as what Manchester Zone 1 could offer. You're putting in more capital, and of course the capital growth might be more stagnant. So if you look at, public reports now, Manchester has been the top 3 best performing cities consistently for the past 5 to 6 years because of these factors. And also a bonus point, Manchester is voted the top 3 best city to live in. So for that to qualify for the best city to live in, we look at both lifestyle, transport, quality of life, amenities as well. And that attracts people to want to move there, to work there as well. And from a business point of view, also from that northern powerhouse, a lot of companies are incentivized to move the headquarters of their operational branch office to Manchester. So the bigger ones have been since Siemens, BBC, Booking.com headquarters moved there. So that brings in a lot of population into it. That contributes again to your rental demand there for your property.
I'm just very envious, right? Because how I wish KL can be like that lah. If an investor wish to know more, how can they do so?
If you wish to explore UK property, I think whether you're new to it or you have invested in UK, you want to explore further on new opportunities, we are always happy to speak with you or to advise you on this matter. So you can always get in touch with us via this email below.
Cool. And I think this format is a very new format. It's very different from our usual. We go and see properties here in Malaysia, right? And the sales gallery is like half an hour, then just go there, right? But this is a very different format where we bring the developer in for action now. Right, bring the developer in to actually pitch to us. It's very different. And I think if you watch the UK vlogs, you will somewhat know where are we in that sense, because I did a vlog about it, right? And sometimes it's really too good to be true. The only bad thing that I can think of, right, will be the uncertainty of interest rates. Right? Then when I speak to my audiences who bought, they didn't take loan. So it's a different level lah. We buy property, we take loan, they don't loan. So it's really diversifying in currency.
But it's also interesting because for mortgage, it is a high interest environment now. The base rate has been increased to 5.25 for UK recently. You look at this on both ways, I would say. For UK, first thing first, you apply for mortgage closer to completion. So it depends on the completion of the property. And interest rate is expected to lower down in 2024 to 2025. And of course, if you look at what has happened before, because this is not the first time interest has gone up, it's a way of controlling the market as well. So when interest actually gone up, a lot of locals, they would refrain from buying properties. So they would then resort to renting. So when this happens, we always see a surge in rental demand. And, that really benefits either owners who have bought it or has investors in it.
So that's why if you have money, if you have played you fully played the Malaysian game, right? I think UK is one thing. Like the only reason that I really would pull the trigger for is for my children's education.
Yes, yeah.
Like that's in case, right?
Yeah.
In the future, if my kid were to study Cambridge, I almost 100% cannot afford unless I buy an apartment there.
Yeah.
Right.
Yeah, I think it helps you as well in your planning, isn't it?
Yeah.
Yeah, stay, expenses.
You know, even if I sell, I can actually let them rent somewhere at least. Because the format for tenants is very different there. Students, you need to pay upfront 12 months plus guarantor.
Yeah.
Only you can secure a room to rent. Is that crazy as a landlord? That's so happy with. That's why like when I went there, the biggest question is why locals don't buy. Priorities difference or culture difference.
Locals, they do buy, but you know what we also notice is that a lot of locals on their younger days, right, 20 to 30s, they like to rent in city center. As we mentioned, they like to move around. When they get married, settled down, when they are 30s, 40s, sometimes they like to buy outside of zone 1. But it's more like houses, right? So you stay in there, you have a nice garden. But with those, the rental demand and the value growth is very different from zone 1.
Yep.
Yeah, so it depends on the purpose again, right? So that's what the locals are. That's the sentiments I would share on different zonings of UK. So again, that benefits you as a foreign buyer.
Any more information that like the audience should know before calling you guys, or just like operating hours? How is it like? Like do they follow Malaysian time or?
We are 24/7. So yeah, do get in touch.
Or your boss will be very proud.
Yes. We're always happy to help, to have a chat to understand your needs, even if it's your initial phases.
Yep.
So just to sort out whether this would fit into your appetite. So drop us a message and, me or my team will be in contact with you.
Yep. So my advice would be to really ask like what's the capital upfront, what's the predicted interest rate, what's the predicted ROI, what's the services like when you want to get the rental out, the unit out. What's the management fees like? What's the tax like? What's the stamp duty like? Everything, ask them, right? I don't sell, they sell, right? And I think that's all for today. Like he said, if you have any more information that you need, right, do just email them. They will schedule a call with you guys. And thank you, Lucas, for coming.
Thank you for
coming all over to KL just to share with us. Right, see you guys. Ciao.
Bye.